Today's number, guys, is 3, as we've seen a tripling in debt concerns when it comes to Oracle over the last couple of months. But could this be exactly where the Federal Reserve steps in and liquidity becomes provided once again? Well, with Bitcoin now breaking above the daily 20 moving average that we suspected, we face off at 96,000. And of course, we see positive gamma re-enter the markets when it comes to the US 500. So is this all part of a larger trap into the end of December? Or are we still on track for what is usually a Christmas rally? Well, it depends where you're looking. And if you've been watching these videos for the last couple of weeks and months, you would know that there are some very good abundance options. Guys, join us as we cover stocks, commodities, and cryptos in what you need to know as an investor and trader right now in these markets. See you soon. Well, welcome back everyone to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be talking about what Michael Burry just said about Bitcoin in the markets. Yes, Mr. Beast is now getting involved, and what has Wall Street been up to? A couple of large dark pools over the last 24 hours. We'll start the story though with you guys, because I've got some amazing pictures being sent to me from many of you in the YouTube recap. And this one here is from Rakan over on X. He posted this to me, and he is in the top 0.6% of viewers. Can anyone beat him? I'm not sure, but it takes true dedication to watch any content creator this many times, and I do truly appreciate it. So thanks so much for the support in 2025, and I'm looking forward to bringing you some amazing content in 2026. Things like gold, silver, precious metals, and obviously our calls on Bitcoin and many other market sectors this year have been pretty good. But at the same time, there's always room for improvement, isn't there? And we look forward to 26 because it is going to be a volatile year. It's midterms, and it tends to be one of those ones that brings amazing opportunities. Let's kick off with Michael Burry. He's back at it again, once again saying that he believes that the market is going to be in for a sell-off worse than the 2000s dot-com bubble, and that he also thinks Bitcoin is worthless and it is the tulip bulb of our time. So, of course, Michael Burry's been pretty bearish. He's moved to Substack recently, and there's been all sorts of hoo-ha about that. But the main thing always is to consider that he did make a pretty big pivot recently, and that often marks the sign and the changing of the guard when it comes to the most well-known bears. If you've got other well-known bears out there that you are tracking, let me know in the comments description down below, because that will become a very important read into 2026. Another one is that, yes, that Mr. Beast, the one on YouTube, the biggest content creator in the world, is now about to launch a financial services platform. That's pretty wild stuff, and of course, it really proves that everybody is getting involved in the game, which often does, of course, mean that we're in later stage cycles when it comes to markets. So it's a story to watch. Let's now talk AI bubble, because we have not seen this one for a little while. A CD that's breaking out, and yes, credit default swaps on Oracle are now at a 16-year high, and they have surpassed what we saw during the crash of 2022. This is basically telling us that some AI companies, what was once considered, remember Larry Ellison made the most amount of money in one day ever just a few months ago, all of a sudden things have soured, the stock is down, and you can see that the risks to that company are clearly rising, tripling off the bottom in just a few months and getting back to where we were before the dot-com bubble. Is this a warning sign? I would say absolutely. It's like a shot across the bow, and it is something that we have to consider moving forward. Of course, it doesn't crash a market like that, but it is another warning sign. And CDs are something that we track very heavily here on the markets, along with bonds, because remember, if the bonds market starts to really get concerned, then we've got big problems. A lot of people going crazy about the Japanese yields as well, last 24 hours spiking up again. But maybe for me, this chart is probably the one to continue to watch, which is that the fact that investors are not buying bonds. This has been a pretty stable kind of thing for a long time now. No one's like bonds. Hey, why would you? Some of them have been absolutely terrible. But they're starting to get to that point of underinvestment that has often been before super bubbles or crashes themselves. And this is something to continue to watch into 2026, because of course it shows that no one wants bonds, and that's exactly when you may want to start thinking about them. Now, selection will be key. There'll be certain bonds such as companies that I think will be very dangerous, but maybe there'll be government ones that actually are okay in the future. Now let's talk about quantitative tapering and of course the QE cycle that everyone now sees to think is coming. Recently, we just saw $13.5 billion injected into, of course, the repo market, showing that there's fragility in the system. Basically, banks needed instant cash injections. We saw something similar in 2019 into 2020, which obviously led into, of course, that kind of crash that happened in the COVID crisis. Now, post that point, we got QE. Since then, we've got QT. And while I don't expect traditional QE to come back, a lot of people do expect this. And of course, it's creating a lot of hype around the markets right now. One of my biggest concerns into 2026, 27, I've said this to you many times, is the concentration of this market. And more importantly, the way that we're currently valuing all stocks. Now, you guys know that one thing that has generally stood the test of time, and you may say it doesn't work, is valuations, particularly the Schiller valuation, which again hasn't held for the last kind of decade. And this is an interesting point, but it is implying that the return actual gains here on the S&P are going to be very, very low. Now, I actually don't really follow it like this, but what I do say is that when we've had back-to-back extremely good years, which we're about to get, so of course by the end of 2025, if we do close with a double-digit gain, which I think we will, that is going to actually give us a single-digit gain, if not negative, potentially in 2026. And there's more of that to come on the channel as we deep dive into what the data and the statistics actually tell us, because it's not going to be as easy as this year. It's a midterm year. It tends to bring that volatility. Speaking of volatility, are we about to see some just around the corner? You can see here volume leaders with some pretty interesting dark pools on UPRO, which is a well-known, of course, S&P 500 fund. We got a large transaction just near the close of the last 24 hours, right between that major point of 68.50, 68.70, which you guys know if you watched our previous videos, is exactly where the core wall is. This is exactly where we expect markets to possibly find a little bit of a struggle. In terms of the directs on S&P 3 times S&P fund, you can see another large dark pool came through. So there's clearly a little bit you would have to think of take profit going on. This was probably this person over here exiting the position. Is it a sign to sell? Not really. The market itself is actually quite bullish in structure, but it does tell you that maybe we'll find some further consolidation here. Maybe it's going to be a little bit tougher to break through 68.70, but we still maintain that at this point, December bull seems to be still the main course of action based on the thrusts, based on the other things. So where else are opportunities? Well, we've argued oil services here on the channel for the last month and a bit, and it's been pretty much one of the best sectors. And it just shows you abundance mindset pays out, technical analysis pays out, and it's all about bringing together a mixture of all those things. We like TA, data, macro when you get able to cut through it, and of course, exceptionally good charts in terms of structure. And you can see here that commodities fund flows are starting to pick up this year. And you can also see that commodities themselves, while some have done quite well, rare earths particularly, some are just starting to play catch up. So could there be kind of like a stagflation crisis, an inflation crisis, some kind of pickup in metals? I do still continue to think that they're relatively cheap, but I'm always interested to know your comments down below on what you guys think. When it comes to the S&P 500 and December, often we bottom in two areas. We either bottom right now this week, or of course we bottom during the middle of it. And you guys saw this in our recent videos where we talked about Blue Curtix data here, which basically suggested that, yeah, if we do see a sell, it's more likely we'll bottom somewhere at December 16th to 20th and then have a Christmas rally. And it's been actually due. It's been a little while since we've seen a proper Christmas rally. A lot of people stopped believing in it. I always say that it just really doesn't really matter too much about that. What you're looking for is structure. So the structure still looks good, and so do these thrusts. And what thrusts are is basically a ton of stocks all going up on the same day after each other. And of course, this was a read we got last week, which led into, of course, us being bullish. With it at the same time, it also leads into some extremely good stats over the next coming months, which lines up very well with our 7 consecutive months, bring a pullback in November. And then, of course, we generally go up after that. And that's, of course, the argument we've pretty much had for the last month. And it's been working pretty damn well. If you have a look here, the streak seems to continue whenever we've had similar reads to this market structure. And I think this is one of the best charts. And obviously, what happens next year, though, now that's the question mark, because there are some nasties here. And it's really about sugar rush maybe for now, then volatility, then some big concerns. Speaking of volatility, BTF or BTF, Bitcoin ETF flows have started to go positive again. We suspected this was going to take place because, of course, we hit liquidity steals. And more importantly, we actually saw a lot of price action. So now that we've got the December 2nd flow data, you can see here that clearly Bitcoin has had IBIT, the most important one, see a lot extra flows into it. And this all makes sense when we start to look at liquidity charts. And again, if you want to find these things, we update them daily at the moment over on X, as it is one of the most interesting charts in my opinion. We cover all these charts because remember, all these markets are connected together, guys. And yeah, it's really important. By the way, if you're wondering why my voice is crazy, unfortunately, my son may be a little bit sick, but don't worry, we're on the mend. We'll be back and ready for you soon. So we've got to keep these markets never sleep for anyone, guys. Let's keep going. 96,000, key area. Obviously, we know there's a lot of liquidity there. We get through that 96, then we're probably going to start realistically going towards 106, which is the next level of liquidity. And you guys know there's usually gaps in between these zones. So the one great thing about technical analysis and psychology and everything else in the markets is when one market is broken or level is broken, we often move towards that next level of equilibrium. And I teach this a lot in my day trading masterclass. There's a ton of replication. If you ever do that course, then you watch my daily shows, you're going to understand why I like a few positions. But yeah, this is actually still looking pretty good. And of course, it closed above that daily 20 moving average. S&P 500, you guys can see it here, 68.50. Pit basically just stuck there. It doesn't look bad. Here are the updated options, highs and lows for the next 24 hours. And of course, we've got a little bit of an overbought signal here when it comes to the market and where we're at. And it makes sense. I mean, if you have a look here at the options, 68.50, 68.50, 68.70, we know, and we closed right on it, that we're not quite in mega positive gamma because we're 1 point in. But what we are at is a call wall. So if the market's going to find a little bit of weakness, this is pretty much where you'd expect it to come in. Am I overall concerned? No. I think the market here is just going to go down to 6,700, and then we'll find out whether the bulls are willing to bid it straight away at that price. For Tesla traders, oh, guys, you're crazy. I tell you what, you're absolutely mad, but well done. Another decent session. Wow. Up to 450 almost. It's incredible how that positive gamma pushes through on Tesla, and it just shows you have to be malleable in this stock. Obviously, we went from being bullish, losing that position, it going down, 385 was the put wall. It bounced, double bottomed, and then all of a sudden you've got a positive trade again. So why is that important? It's just basically that abundance mindset, continuously playing the game. And the game is, of course, stacking the odds in your favor. And that's what you need to do. We always need to stack those odds. The great thing about the stock market or any investment is you can stack edge. Guess where you can't stack edge? Some of those casino games, guys. There ain't no edge there. They just rip you off. Isn't there like a triple or quadruple zero? If you're on this channel and you play quad zero roulette, unsubscribe. That's what you need to do. That is a disgusting thing. Do not play quad zero roulette. That is a disgrace. Anyway, that's my opinion. Don't play any of those games, frankly. Get it in the market, get it invested. Make sure that you actually do the right thing with your money. That is a mad thing, quad zero roulette. Let's talk about NVIDIA here, 185. That's a major level. We know this call zone is important, but NVIDIA is not really the stock of the moment. It's semiconductors across the board, though, picking up because, of course, realistically, Google said, you know what, we can do it too, guys. And that's, of course, been a great story as well. IBIT, yes, positive gamma's taken hold when it comes to Bitcoin. That's pushed us a little bit higher. 55 is going to correspond very well with that major level we're talking about, which is 96. So obviously, we kind of expect the markets to try to push a little bit higher here on Bitcoin, even if they pull back now. And gold is continuing to face off at 385 to 390. So nothing really going on too much there in those two. What about the bonds markets? Are they freaking out? The answer is still no. I know a lot of people think they are, but they're not. I'm looking. When we're talking about growth versus value, IVW, IVF, guys, there's a change of guard here. That's actually a nasty candle 2 weeks ago. We first brought this up a little while ago. We talked about value starting to beat out potentially growth. If that continues to happen into 2026, remember that's a bad structural sign. That's actually really bad. So you might think, oh, that's fantastic. Not so much. So we will obviously be looking at that very closely. And guys, of course, you're all going to be talking to me about these Japanese yields, the 30Y, the 10, the 2-year, everything. Yes, they're going up. Yes, it's a concern. Yes, it's getting millions of views across the board and everyone's freaking out. I always say until we see something crack, you've got to just kind of remain optimistic. Optimism does pay in these markets. There are plenty of crisis periods, most of them event to nothing, and Japan's had many crisis periods and they've just done a huge print. Look, it's a disaster over there. It's a basket case. But what do you expect? I mean, it's not a new story. We will wait and see and continue to monitor. And if it does freak out, right, I'll talk to you about it. Let's have a look here at Oracle. You can see it's kind of going up against the bad press. And boy, oh boy, is it getting bad press at the moment. Look, CDs have spiked up massively. The stock has been obliterated though. So you've got to remember it's already packed in. If it's in the press, it's in the price. So am I concerned about these CDs? Yeah, it's not great, but 45% down. That's what you'd actually expect it to do with a CD spike like that. And there's clearly a concern here. I think it's the broader ramifications, really. Are we going to see NVIDIA start to struggle now that there's competition potentially at bay? Are we going to see the entire AI market? I've heard allegedly that there's OpenAI sleuths out there, gobbling the RAM, guys. They're everywhere. They're gobbling the RAM. Do not buy DDR5 RAM. You'd be mad to buy DDR5 RAM right now. But you know what? I've heard that it's out till I think it's like next year, like December or something. Someone can tell me in the comment section. That's pretty nuts. But either way, clearly there's a lot of people trying to fight over the stuff. I think we're on code amber at the moment, or code red or something like that at OpenAI. They know that their learning module or model is kind of weakening against people like Google, and NVIDIA is even starting to look shaky. I mean, look here, break underneath this, not going to be too good. Semiconductors, meanwhile, look at them go. Again, when semis raise and keep going up, that is not a bearish sign for markets. Dollar index, new low, pretty much taking out the bulls for now. So as we've said, short time frame, as soon as we lost that daily, unfortunately, it was the bears in control, and we'll reassess. But at the moment, I'd say the bears are back or neutral on dollar, and I'd say very neutral on that one. Gold, it's pulled back a little bit, just kind of taking a sideways action. We'll update that. And silver continues to be a very dull kind of squeeze. So that is not a market I would try to short. That is a market that still looks bullish, and pullbacks are most likely going to be met by bull demand. On another one, of course, oil services, one of our favorites about a month and a bit ago. When was it? Oh, it was even more, 13th-ish. Around this area here, I really got bullish oil services with our private community. Links in the description. And it was an excellent trade just the last week and a bit. It just shows there are better risk rewards in other locations. It doesn't always have to be technology. It doesn't always have to be Amazon stock or Apple or something else. Apple is doing quite well though. It's slowly going up. But yeah, oil services, massive spike. If you've been watching, you'll know that I've been talking about that. Nice one on Tesla. Again, just shows you nice price action. Strong 425. We talked about it. Now it's up. Could we go to 500? Certainly could. And it's starting to look a little bit better. Chinese markets, that's a big macro story for me. Liquidity, it is doing nothing. There is nothing new that I'm going to say there. It's just still bullish on the macro side. Not much action on the price action. NASDAQ, we're facing off on that big resistance. If you actually have a look here at the Qs with the junior, so that is the 100 to 200, you'll actually note that these have gone quite well. And what this is showing me is, again, rotation seems to be the play here, guys. It's not the top stocks that are blowing out this market. That is a problem, because remember what I said months ago when we got that first cut. If we're not led by the biggest stocks in the world and others start leading, then all of a sudden things get worse. So 2026 is going to be important. Right now, don't care, but it's a story to be told. QQQJ, by the way, looking pretty strong. So even if it gets a pullback here, I think that's a fairly strong setup. Now, let's move over to Bitcoin. Where are we here? We got Bitcoin here on the charts, and it was a close above the daily 20. And of course, 96 is kind of the next stop. Anchored VWAP off the top. A lot of stuff going on here. A lot of liquidity going on here. Very strong, nice buy off. Obviously, we had a mass liquidation zone down in this area. We talked about it quite a lot. Is it out of all of its problems? No. But do we have some positive signs? Yes. I will actually hunt for a few more dark pools. I'm assuming there's some down there I've missed, but I'll look for them. But if the weekly closes like this, that would be an excellent sign. And I know everyone writes Bitcoin off and calls it a Ponzi scheme or whatever else they want to call it, tulips and like Michael Burry and everybody. But you've got to remember, that in this case, Bitcoin is built on the energy of the burn in terms of creating it over time. You've also got so many people that know it, and you do need to consider alt assets into the future. I mean, fiat is obviously coming under a lot of pressure, especially over the next decade. So while I may be a bit of more of a gold bug, silver bug, that kind of thing, I still love this. I call it part of the Holy Trinity, and we will see very clearly very soon, I guess, whether we're actually in the halving cycle and things are going to go really bad. But I think around this 100K fight area, 96 to 100, you've got a big zone because you've got the 50, which was pretty consistent at holding it up. That's the Scottie Pippen moving average. And we've also got a few other things that are all kind of connecting around there. So a lot of interesting stuff going on Bitcoin, some really good signs straight away right now. Obviously, weekly close will be all important to this chart, but to get above the daily is a huge deal, and that does bring positive flow. If you enjoyed today's video, guys, please remember to subscribe. Check out our Black Friday sale. I kept it open for a few more days. If you're interested, it's quite a lot of demand, so appreciate that, guys. Great to have you on board. And obviously, also follow Thomas Atkinson on LinkedIn. Check me out on X as well. I post a few of the charts here for this video. And in general, I'd just like to say a big thank you for this year. You guys sending me through those recaps, some of you being in the top percentile, even the ones that are in the top 5% watching a lot of videos. I've got to say a lot of time. It's testament to you guys for learning more. It's probably testament to our community for being so passionate about so many different markets. And you know what? We are niche because we cover everything. But remember, guys, everything is connected. It doesn't matter whether it's property or it's stocks or it's bonds or it's probably even Pokemon cards. Realistically, every market trades in a very similar way. You could be trading CS2 skins and you'd be surprised. You can take what you learn on this channel, and believe me, that is a total easy market compared to what we're doing here in stocks and stuff. So each market's really interesting, and never poo-poo the other one because it just probably means you don't know enough about it just yet. Bye for now. We'll catch you in the next one.